Well, property investors both selling up and buying in, with ABS data showing listings and loans rising in the 12 months to September. To discuss, Anthony Landahl, Managing Director and Mortgage Broker at Equilibria Finance, joining me. So a little bit of a competing narrative here. What are you seeing?
Yeah, we have. We're sort of seeing investors back in the market on both fronts, supply and demand. We had investor demand coming off a very subdued period since COVID, since we had the rising rates. And investor listings hit record highs in November 2021. We're not back at those sort of levels, but we're seeing more stock from investors coming on the market. But we're also seeing a lot more demand, with credit growth up 18.8% over the last 12 months. So we're seeing both things happening. Back in 2021, with the record highs, with the record house prices, with rising rates, it was all about investors selling and a lot of investors sitting on their hands. But now we're seeing investors coming into the market, but we're also seeing investor grade stock coming on the market as well. And it's very much regionalised in a split sort of market we're seeing.
Or I was going to say, is it playing out nationally, but it's more regional based?
Well, it is playing out nationally. By regional, I guess I mean state by state.
Right.
What we're seeing is demand in those high growth states. We're seeing demand really high up in Western Australia, South Australia, Queensland, which are seen as, I guess, more affordable. They're areas where there's also strong capital growth still. Investors are gravitating there. We're seeing more stock come on the market where we've got the low growth areas. We're seeing more stock in Victoria, where they're having obviously new thresholds around land tax. The market's more subdued. And in Tasmania, where we're not seeing as much of that capital growth, investors are leaving. New South Wales is an interesting market. We've got some investors looking for some of those affordable areas. We've also got a bit of an oversupply in some of the unit market, which some investors might be seeing as value, but they're not holding their capital growth at the moment. So New South Wales is sort of flatlining. Strong activity in Queensland, West Australia, Perth, and in Victoria and Tassie, they're selling up.
Right, I was going to ask you, what sort of like tree or sea change are you seeing, given I've spoken to a number of people that are like, we're getting out of Sydney, it's too expensive, we can get a house for less than what our apartment costs.
Yeah, one of the big challenges, I guess, if we shift to home buyers for a minute, one of the big challenges is those people trying to upgrade from a unit to a house. The gap has grown, the affordability challenges have grown, the sale of a unit may not fund ultimately the deposit for a house, with some of the serviceability challenges as well. So we're seeing a lot of demand in those commutable areas, whether it's the Sunshine Coast in Queensland, whether it's the outer suburbs of Victoria or Central Coast Wollongong in Sydney, areas that maybe more have been traditionally for investors. We are seeing some home buyers move to those areas to upgrade, to be able to stay in the market in a larger property.
What about what you're seeing in terms of rents? A lot of chatter that perhaps the peak has been put in?
Yeah, the rental yields, I mean, we had very, very strong growth in rental yields 12, 18 months ago. We had vacancy rates pretty well nationally under 1%. It does feel like, and the data's supporting, that some of that high growth in the rental yields has come off. With more investors coming into the market, there's more rental properties in the market. We've also seen some changes in some of the ways people are living, which is freeing up some property. Renters might be living together again. So we are seeing some of the easing on the pressure on the rental market. In fairness as well, a lot of the landlords have good long-term tenants and didn't pass on all of those potential increases they could have in terms of the rents as well.
We talked about why people might be getting into the market. Why are people leaving it?
Yeah, a couple of simple reasons. Cash flow is probably the biggest challenge at the moment for investors, particularly those investors who are fairly highly leveraged. They might have an existing home loan debt, they might have 3 or 4 investment properties that they've got fairly highly geared. With the high interest rates, in addition, there's higher costs of maintenance, generally higher cost of living pressures. Investors are having real cash flow challenges. So a lot of investors are leaving for those reasons. And also in Victoria, a lot of investors are fleeing with what they're doing to the Airbnb, some regulation around that, as well as the change in the land tax threshold, which is making it less attractive for investors in those states. A lot of the investors that are coming into the market are first-time investors or those that are less geared, less leveraged, they can manage the cash flow a lot more. And often we're seeing a first home buyer who can't afford a place where they want to live deciding to buy an investment as well.
Yeah, probably not a bad idea. A couple of months ago we talked about the spring selling season. We're kind of almost out of spring now, despite the fact it never really sprung. Did you see much demand or many sort of, the spring selling season sort of come to fruition?
Yeah, generally in spring we see stock up around 20 to 25%. We see demand up about 15%. We saw stock up again this year. I think a lot of vendors were hoping that they'd capture some of the higher prices we've seen in the last couple of years, but we've seen a much more cautious approach from buyers. So stock's been up. The sellers aren't quite catching the prices that they may have hoped, particularly in some of those less affordable areas. So auction clearance rates are down a little bit. Demand's down a little bit from what we traditionally see in spring, but we are getting some strong prices nationally in some of those more affordable areas, whether it's the outskirts of the capital cities. We're still getting some strong pricing holding up there, with concentration competition in areas deemed more affordable, with a lot of the affordability challenges. So people are looking at different areas. Some of those less affordable areas, prices are actually coming off a little bit. Whether it's Northern Beaches, eastern suburbs, inner west of Sydney, whether it's some of those wealthier suburbs in and around Perth and Brisbane, we're actually seeing some of those prices easing because people just can't afford to get in the market, and the seller still wants some of those higher dollars that they were capturing a couple of years ago.